Welcome to Crypto IO. My name is Ivan, and today we have a very special topic. We're going to be talking about price models and Bitcoin valuations. Now, in this video, I'm going to go over several price models or valuations. I'm going to have timestamps below if you want to skip through some of these. And I'm just going to do a very brief discussion about the model or the valuation, and then just give my 2 cents on each one of them. At the very end, we're going to discuss what is the price of Bitcoin by 2030. And we're going to use the different models and valuations to try and estimate what the potential return of our investment would be if we purchase Bitcoin at different price points and then we held it onto 2030, whatever that model valuation would be at that point in time. And we're going to compare that to a couple of different investments to see how it would compare. Now, just a quick disclaimer, this is not financial advice. And all these models are going to be positive, so they're all going to have Bitcoin going up to a much higher value, but there is a risk that Bitcoin could fail and go to zero. So always keep in mind that there is some risk associated with that, and you should plan for it. Now, the first model we're going to talk about is the stock to flow model. And this is probably the most widely known model within the Bitcoin community. It's also the most popular one. And it was made popular by Plan B, who predicted that Bitcoin would reach a price of 100,000 by 2021. Of course, we didn't see that happen. And, to his defense, his original model was predicting 55,000. He later made some adjustments and made the call of 100,000, which the original one worked. The adjusted one did not. But he became very popular because of that $100,000 prediction. What the stock to flow model is just a way to measure scarcity. So it's a very simple formula. It just tracks what the current supply of an asset is, and then it gets divided by the new supply of the asset being issued into existence. It was traditionally used for commodities such as gold, silver, and other commodities. Here's a quick chart of different assets based on their stock to flow ratio and their market cap. And we can see that gold is the highest. Next was silver. And then the dots are Bitcoin during its halving cycle. And you can see each time Bitcoin goes through a halving cycle, its stock to flow ratio goes up. And that makes sense because the new supply of Bitcoin coming into the market, it gets divided in half or reduced by half. So the stock to flow naturally would go higher and higher. And soon it'll be close to the ratio of gold. The idea is that as Bitcoin becomes more scarce, the market cap or its valuation should go higher in price. And then here we have a chart of how the halving cycles work. So approximately every 4 years, the Bitcoin supply or newly issued supply gets halved. That's why it's called halvings. And we can see currently we're actually right here where the red arrow is at, and there's 6.25 Bitcoin issued per every block reward. And then sometime early 2024, we're going to go through another halving where it's going to reduce the new supply by half. So the inflation rate currently sits at somewhere around 1.7%. And later that's going to become closer to 0.9% inflation rate. And again, the idea is that as Bitcoin becomes more scarce, the value should be going up. And that's exactly what the stock to flow model predicts. Now, it did a phenomenal job predicting past price. The only issue that I see with the stock to flow model is that it's uncapped. It can essentially continue going up until an infinite amount of dollars. And that's because it eventually just continues valuing Bitcoin higher and higher as the halvings continue and it becomes more scarce and there's less Bitcoin going around. Now, I think this is one of the downsides to the stock to flow model because it has a kind of like a linear growth to it. But as the price of any asset grows, it becomes exponentially more difficult and expensive to increase or maintain the same growth levels moving forward. So realistically, I don't think it's possible to have a linear growth after a specific point. And I think that's the biggest issue with the stock to flow model. And Plan B, acknowledges this. He has said multiple times in different podcasts, videos, that it will break. He doesn't know exactly when that will happen, but yes, the stock to flow model it's only good up to a certain point. We just don't know what that point is yet. All right, the second model we're going to be discussing today, it's going to be the limited growth stock to flow model. This was made by Quant Mario. Now, this model was inspired by the stock to flow model from Plan B, but as Quant Mario explained on his article, the stock to flow assumes that there's an unlimited amount of money in the world that can flow into Bitcoin, but there's not. And again, this is the issue that I discussed before, where the stock to flow model assumes that Bitcoin is going to grow in a linear manner, which is really not possible. After a certain point, growth is going to have to slow down. So Quant Mario did two things. He introduced a limited growth power law model, and this is essentially just to cap the growth. It's going to be more of an S-curve. And the second thing he did, he changed the halving model. So instead of being a step function, so every 4 years we have a halving or decline of the new issued Bitcoin by half, he changed this to be a continuous function. It has the exact same rate, so the same amount of Bitcoin get issued over that 4-year period. It's just that it's now just continuous and flowing, so it's easier to predict the Bitcoin. I think this is good because most people that are familiar with Bitcoin understand the halving cycles, and they understand that every 4 years it becomes more scarce and the supply just gets reduced by half, or the new supply gets reduced by half. And so that gets priced in well before the halving cycle begins. And here is his model. So we can see the black line right here is the actual prediction of the model. And then he added a error lines. So these are the green shaded lines. You can see that Bitcoin always kind of goes in this massive swings. So it'll trade above those green lines, and then it'll trade below what's fair value, and then it just goes up and down, up and down. And we currently in 2022 we're also going through another down cycle where it sits below what's considered to be the fair line. Now, based on this model, if just trying to look at it from an eye level right here, so I'd say the fair price for this model in 2022, it's somewhere around 20 to 25,000. Really hard to tell, just eyeballing the number right here, but it would be somewhere around that range of 20 to 25,000. And we're currently at last time I checked, it was somewhere around 19,000. So we're a little bit below that. And according to this, there is a chance of going to two standard deviations below the fair price, potentially even 3. We didn't see that on the last cycle, but it could go all the way down to the third one, which could put Bitcoin at very close or just below 10,000. Now, again, we don't necessarily have to reach those lows, but it could go substantially or a little bit lower than where we're currently at based on this model. Now, this model did a really good job at predicting the previous cycle. So it was done in 2020. But if we fill the price for 2021, I believe the peak of the cycle just broke this last third standard deviation of the error right here. Then we came right back down, and once again, we're maybe gonna see slightly lower levels. Now, I think this is a pretty good model. It's a little bit more conservative. And as you can see, the growth is substantially slower compared to the stock to flow model. So this one by 2030, I believe it was only predicting a price of around 120,000. And again, that's the fair value. It doesn't mean that Bitcoin can't reach. If we just look at the ranges of the standard deviations, this looks easily over 500,000. So based on the price swings that Bitcoin cycles tend to have, we could easily go well above the fair value that this model is predicting by 2030. All right. Next models we're going to be looking at are the demand models, and this is done by Jurrien Timmer. He is a director at Fidelity Investments, and Jurrien has been with Fidelity for well over 3 decades, I believe, and he does some phenomenal like charting and just market analysis. So make sure you follow him on Twitter, because he explains he gives a ton of information regarding the markets. So it's not just Bitcoin. He is a big Bitcoin believer. So a lot of the work that he's done, I'm a big fan when it comes to Bitcoin, but he does for pretty much every market out there. Okay, so the first two models that we're going to be looking at are based on previous technology adoptions. So what he did is he looked at the adoption curves for multiple technologies. So he looked at railways, and he actually has a different chart, just multiple technologies. And then he saw the ones that resemble closest to the adoption or price of Bitcoin. So he retrofitted those, put them in the same chart, and then essentially we ended up with a growth model based on the adoption of these two different technologies. One is for the internet and the other one's for the mobile phone users. And you can see that the internet one, it's even though both of them kind of started roughly the same, the internet slowed down a little bit more, and you can see because of that the price targets or the price levels that it's predicting are also substantially lower, whereas the mobile phone users had a much faster growth or adoption levels. So currently, because historically both of these adoptions or growths look very similar, we don't know which one is Bitcoin going to resemble the most. So it could be either one of these two. We just don't know. We're going to have to wait until time lets us know. And it could be that Bitcoin just does something completely different, and it doesn't match either one. But for the time being, personally, I think the mobile phone one makes the most sense, because all you need to work with Bitcoin is a mobile phone. And there are millions of people throughout the world that don't have access to banks, but they have a phone. So I believe that eventually Bitcoin is going to become their own bank, or these people are going to become their own bank. The next model is based on the non-zero addresses within the Bitcoin network. So this is essentially just saying how many wallets or addresses are in Bitcoin that have just a small amount. It doesn't have to be much, but just a little bit of Bitcoin in the address. And we can see right here. So the number of wallets has been growing at a really fast rate. So every year, regardless of what the price is doing, even over here in 2014 with the massive crash, we can see that the number of wallets still continue to grow. Back over here during the 2018-2019 crash, number of wallets continue to grow. So adoption in the Bitcoin continues to steadily grow, regardless of what the actual price is doing. And if we, this is just a regression model, but it's predicting that if we continue this trend of growth, then by 2030, I believe it was like a 12 trillion market cap, and we'll have to look at the chart later, but I think it was Bitcoin like $750,000 per Bitcoin based on this model. Now, I like this model. The only downside that I see is that I don't think it captures adoption to 100%. And that's because a lot of people just purchase Bitcoin through an exchange and they never move it from the exchange into their own wallet, so they don't take custody of it. And we're not able to see the adoption because those exchanges essentially just keep the funds on their own wallets. So we missed a lot of the people that could have been added into this growth just because it's sitting in exchanges. But just purely based on the people that are using the Bitcoin network itself or directly, we can see that it's had some phenomenal growth. The next valuation we're going to be talking about is the Winklevoss twins. Now, for those of you that don't know the Winklevoss, they sued Mark Zuckerberg for stealing their idea of Facebook. And in 2011, I believe Mark settled with them. And I believe Mark paid him $25 million and then $45 million in Facebook stock. After that, the Winklevoss twins ended up just becoming essentially entrepreneurs. They started their own capital investment company. Later on, they learned about Bitcoin, and that was in 2012, and they became huge advocates of it. And then a couple years later, they opened Gemini Exchange, which Gemini is one of the more, let's say, foundational exchanges within the US. Even though they don't market as much, they're not as widely known. They've done a lot on the institutional side, and also I'd say they're pretty good exchange overall, very similar to Coinbase, maybe just not as big as Coinbase is, because Coinbase has catered a lot more for just the individual user, and where I feel like Gemini tried to tackle more on the institutional side first, so the retail investor was not as big, or their big target to begin with. They've been on a few podcasts discussing this idea, and they made an article where they pointed out essentially their breakdown for this. But I guess the overall thesis is that they think that Bitcoin is better than gold. So they expect that Bitcoin is going to replace gold. So this would give Bitcoin the 500,000 valuation. In one of their podcasts, they do mention that they think that this could happen by 2025. But on the article itself, they didn't give any dates specifically. Now, the article does break down several topics, so I think it is a good read if anybody's interested. But it goes over the issues with the US dollar, government debt, money printing, the Cantillon effect, so how did the whole wealth distribution go awry, some of the solutions that they think are possible for the debt bubble. They talk about gold, value in Bitcoin, and then the pros about Bitcoin. And again, lastly, they explain that they believe that Bitcoin is just better than gold, and that's why Bitcoin should have the valuation that gold does today. And I would also mention that they do say that this is kind of like the minimum, because they believe that Bitcoin is much more than just a store of value. So this is just the minimal valuation that they would give it. I guess my only issue with this one is that even though I do agree that Bitcoin is better, I don't think many people or all people are gonna just sell their gold and buy Bitcoin instead. I think gold is still gonna have value. I think a lot of people are still gonna want it, and they're gonna continue purchasing it. So it's not gonna be a just get rid of gold and now you have Bitcoin type of thing. So that's the only argument that I would have on this particular model. Next valuation was based on a YouTube video from InvestAnswers. So I thought James did a phenomenal job on this particular channel, or in this particular video. And the video title is Retire on Bitcoin by 2030 or Sooner, #2021 edition. Now, in this, James analyzed 42 price targets from different analysts, and then he essentially came up with his own valuation based on those 42. Now, before we actually get to the valuation, one slide that I thought was very interesting on his video was this one, and it goes over the supply of Bitcoin. Now, this was in early 2021, so it probably has changed a little bit since then. So these are not going to be 100% accurate. Just keep that in mind. And the only one that I'm kind of questioning a little bit is this one right here. So Last Coins is claiming to be 4 million. The reports that I had seen personally, made this look more closer to like 2 million. So I'm not sure where, the 4 million is coming from. It may be correct. Honestly, I have no idea. And I don't know if anybody has 100% accuracy, because, there could be people that have been holding for 10 years and they just haven't moved it. And, whoever analyzed this might assume that those coins are lost because they haven't been moved for that amount of time. So yeah, I think this one is kind of gray a little bit, but all the other ones, I think they make absolute sense. The one I found interesting was this one, right? So the float. And this is the amount that you and me are continuously buying and selling in exchanges, or, essentially what we're fighting for whenever we're trying to purchase Bitcoin. And that's only 16% of the supply. Now, again, this could have changed a little bit, but I don't think it's going to grow. In fact, I think it's going to be the opposite, because when we look at on-chain analytics, we can see that the amount of people that are continuously buying Bitcoin and just holding it, putting it in cold storage, just continues to grow and grow every year. So regardless of what the price is doing, the number of people just hodling continues to grow. And that means that this percentage is likely bigger today, and this percentage is likely going to be smaller every year. So again, I just found this fascinating because it just shows that more and more people are trying to buy fewer and fewer coins over time. All right, now here's the actual model. So here on this chart, you can see the 42 different valuations that he used, and then he just did a log regression on this guy right here, and he came up with his own model for that. Now for 2030, his model was saying it's going to be just a little over $500,000 per Bitcoin. And in his video, he used 4 different models, and I'm not exactly sure how he came up with the sandbag and the excessive model, as he calls them. But the way I see it, sandbag is just kind of like a more conservative valuation. His model is the one that came from the valuing the 42 one, and then the excessive one. So I'm not sure where this one came, or where these two came from, but that's the ones that he used on his video, so I just set them in there. And then the average, which is just the average of those 3. All right, next valuation model we're going to be talking about is from Mark Moss. He's another YouTuber, podcaster, entrepreneur. He does a lot of phenomenal content regarding multiple different investment opportunities, and he also analyzes kind of like market and what's going on with the government and much more. Definitely go follow him if you don't watch his channel. And for his valuation, it's pretty straightforward. So he made it super simple, and he looked at different assets. So he just looked at assets that Bitcoin could potentially disrupt. So when we look at these, he had real estate. It's humongous. It's the biggest asset in the world. We had gold, equities, negative bonds, and offshore money. Now, quickly, real estate, I don't think Bitcoin is going to disrupt much of the real estate market. Perhaps like a smaller side from the investment thing, where people would choose to invest in Bitcoin versus real estate. But if people, most people would still want to own their own home. So I don't think it can really disrupt kind of like primary homes. So, and it's really difficult to analyze what percentage of the real estate market is like a primary home versus an investment vehicle. So, but moving on, then we have gold. We already kind of discussed about the gold one, equities, negative yielding bonds. I think this one makes a lot more sense. I don't know why anybody would want to own a negative yielding bond, and that's $18 trillion globally. I mean, that is a humongous amount, where instead of getting paid, you're actually losing money in that bond just because it has a negative yield. So this is insane. Whoever owns these, just buy Bitcoin already. And then offshore money. So there's $32 trillion in offshore accounts. So again, a humongous amount of money there. And I think Bitcoin makes sense in this particular case because you can become your own bank. You can take custody of your own coins and move around the world. Nobody can steal them from you or take them from you. And yeah, I think it makes perfect sense. At this point, I think it's also more secure because, as we've seen with Russia and some of the assets that were taken away from the oligarchs, offshore accounts are not that safe anymore. If they want to sanction you, they can, and they will take away your assets. Now, again, his model was pretty straightforward. He took all that 500 trillion, and then he said, just if 5% of that money moves into Bitcoin, that would be $25 trillion. And that gives it a valuation of 1.2 million. He did not give a date. We're just going to use a 2030 date, or as a target date. But I mean, I think this is a pretty simple model, 5%. And I would argue that, I mean, negative yielding bonds, I think it would make sense for a large portion of this to go into Bitcoin. Some portion of offshore accounts, I think it makes sense too. I think a good portion of gold as well makes sense. So even if I don't fully agree with the real estate one, I think the other asset classes could have a large amount or large percentage of that value go into Bitcoin. So I don't think this model is unrealistic. All right. Last model we're going to be talking about is the Ark Invest analysis on Bitcoin. And recently, a couple months ago, actually, there was a short clip from a update on what Ark believes is going on with Bitcoin. It's like 8 minutes long. Again, I'm gonna put the link down in the description below. I think it's worth just listening to it. It's super short and it has a ton of good information. Now I'm gonna cover quickly some of the slides that I thought were the most interesting, but the entire video was really good, so you should definitely watch it. All right, this first one, I think this was the one that caught my eye the most because it talks about Bitcoin as a transaction layer or as a settlement network. And you can see in here that in 2021, Bitcoin transacted more volume than Visa did. And this is huge. Visa is the biggest payment network in the world. So globally, the biggest payment network, and Bitcoin transacted more money in 2021 than Visa did. Now, the only caveat I would say about this is that Bitcoin primarily handles like large transaction amounts. So you can see that the average transaction was $136,000. So Bitcoin cannot compete with Visa when it comes to the number of transactions that it can do, but it makes up for it by the transaction size. And again, I thought this was a phenomenal chart because this shows that Bitcoin is much more than just a store of value. It is definitely disrupting the payments and the settlement side of the business. The next one was it's a little more controversial. So this is the El Salvador adopting Bitcoin, and I mean they showed that there's 3.8 million users of the Chivo wallet. So this is the wallet with Bitcoin versus 1.9 million Salvadorians that have traditional bank accounts. So you can see that Bitcoin wallet users has definitely stepped up. And also the number of people in El Salvador that are actually using Bitcoin as like remittances daily was 2 million. So this is 12% of El Salvador's remittances annually. So, I mean, it's being adopted slowly. So it's not, can't expect a new like currency and network to be adopted overnight. It's going to take time, but this just shows that even though it's a little bit slow, it is being adopted. It is growing. And recently, I just saw on Twitter that I think this number was close to 5 million at this point now. So it just shows that it is growing and it is being utilized in El Salvador. This next chart, I like it just because it shows just how tiny Bitcoin is as an asset compared to basically the major assets in the world. So gold, Bitcoin, super tiny over here, gold being 10 times bigger than Bitcoin. And this was close to the peak in 2021. Now Bitcoin is, I think, closer to like 370 billion. And, that number fluctuates daily. So it is substantially smaller than this. I mean, it probably wouldn't even show in this chart anymore. But you can see equities, money supply, bonds, and then real estate. Like Bitcoin has, it's nowhere compared to these other assets. So Bitcoin is still relatively small and it has a humongous amount of potential to grow in the future. All right, now we're going to talk about the actual valuation that Ark is giving Bitcoin by 2030. And it is 1.36 million. Now, what I really love about this chart is that they broke it down on what area or what business or asset class they think Bitcoin is going to take a percentage of that value. So you can see the remittance network, 50%, emerging market currency. And again, we saw El Salvador already adopting Bitcoin, already using it, even though El Salvador is a tiny country by GDP standards, but it might propagate around. A couple of weeks ago, we saw that the Central African Republic also adopted Bitcoin as a monetary currency, similar to what El Salvador did. And Also, a few weeks ago, El Salvador had a huge meeting where central bankers from multiple small countries went to El Salvador to talk with the president there and discuss how the Bitcoin adoption was working. And the belief is that some of those countries might go back, analyze, and even if it's only a few of them, they may choose to adopt Bitcoin as well. So I think this makes perfect sense. Smaller countries could definitely benefit from adopting Bitcoin, and we may see more and more of them joining the Bitcoin network in the next few years. Settlement network. So this is just bank settlement volumes. I think this one makes sense because if you understand how the banking system works, they have to settle using the Fed, and that can take anywhere between 3 to 5 days. If they're super lucky, it might be sooner than that, but it's a slow and honestly horrible process. They could use Bitcoin instead to settle between one another, or they could even use it for international settlement between international banks. It would happen within a few minutes. And yeah, I mean, this is essentially what XRP is trying to do as well. So I think this one makes sense. Nation state treasury. Not too sure about this one yet, whether other nations are going to choose to adopt it, kind of like the US, whether they would take Bitcoin to put in their treasuries or not. I think this is going to be one of the last adoption steps that we see, just because if a nation does adopt it, then I think it would set kind of like a negative connotation to fiat currency, and it would really strengthen and increase adoption in Bitcoin. So I think nations are probably going to be one of the last ones to adopt Bitcoin. We talked about this one a little bit on Mark Sma's video about the offshore accounts. I think people are going to want to take money off their offshore accounts, savings accounts, just whatever bank or institution they have their money in, and use Bitcoin because it cannot be either censored, it cannot be stolen away from them just digitally or easily. Another example for this one was the Canadian, when they had the strike where the banker their bank accounts got frozen, so they were not able to use their bank accounts. And even people that just donated to support the strike, some of those people also got their banks frozen. So I think this makes sense. Some people are just going to want to have control of their own money rather than depend on these institutions that can easily freeze or take away your assets. Institutional investment. Again, I think we've already seen a few institutions and companies out there, and this one kind of goes hand in hand a little bit over here. So these make sense. And then of course, digital gold. So essentially just taking some market cap from gold, it goes into Bitcoin. Now, 50% might be a little too high still, in my opinion. I would maybe choose like a lower amount. And then, I mean, some of these, like 25% might be high by 2030 as well. So this valuation overall, I think might be a little too optimistic by 2030. But I do like how they broke it down. So it just shows that Bitcoin is much more than just store value. It really fits on multiple purposes, and it's going to disrupt multiple businesses or areas and technologies. All right, so that was all the models, and next we are going to look at what are the potential returns that we could see if these models achieve their target. Now, the way I broke this down and put all the models in here, I try to group them by both price and then what the person or who the valuation came from. So like Jurrien's models, I kept them over here for the demand ones. Then I highlighted the two that I think personally make sense, or that I think are the most viable ones. So I like the phone adoption one, probably the best. So it has a fair value target of 288,000 by 2030. And again, just because the fair value is 288 doesn't mean that the price cannot be much higher during a cycle. So as we saw, Bitcoin goes through these cycles where it trades well above the fair price, and then we go through a bear market and it trades well below the fair price again. So it could go much higher than this, and it could also be somewhat lower depending on where in the cycle we're at. But I just think this is a good model. It's based on previous technology adoptions, and it's somewhat conservative compared to a lot of the other ones. So a lot of times it's better to to expect something lower and then be nicely surprised or rewarded with higher results or expectations in the future. And then the second one is this one. And the reason I like this one is because he did use 42 different price targets or price analysis. So this model is essentially, you could say it's kind of like the medium of 42 different models. So again, I think it's a pretty nice target. It also gets really close to the gold valuation. So I think this one makes somewhat sense as well. Now, up here, you're going to see the different purchase price. And all this says is if you purchase Bitcoin at like 15,000, and then we go down here and your target was 288,000, then you would see a 1,820% return on your investment. And then if we annualize this, that would be a 45% annual return on that investment. And again, if you bought at 20,000, well, that goes down to 40%, 25, 36, and so on and so forth. So you can see I try to keep all the price targets that we had. Unfortunately, I ran out of space, so I couldn't fit any more brackets in there. But I think these should cover the vast majority of price targets that most people have available to purchase Bitcoin today. Currently sits somewhere close to 20,000, so we would be looking at this particular bracket. And when we looked at the demand model, that sits at 40% annualized. Now, 40% is a phenomenal, and I cannot say it enough, it is a phenomenal return. I put some comparisons down here, but like these are some of the famous investors, like Sir John Templeton. He had an average return of 15%, and Sir John Templeton, I think he traded close to like 4 decades, and he was considered one of the best investors of all time, and he had a 15% average return. Warren Buffett is also one of the most renowned investors worldwide. He has a 20% return. Now, Warren Buffett over the last few decades, his return has been a lot closer to what the S&P 500 has been. But during his initial years of investment, he had such huge returns that over time, the average has been close to 20%. But if we just look at the most recent past, then he would be closer to the S&P 500. Nonetheless, he's still considered a phenomenal investor. Peter Lynch, he managed the Medallion Fund from 1977 to 1990, and he had a 29% return. Again, even the highest, most renowned investors of all time, over a long period of time, they cannot get close to a 40% annualized return. So, if Bitcoin comes close to 288, it would be phenomenal returns. I also added the previous all-time high. So let's say Bitcoin just gets to the previous all-time high of 69,000 by 2030. You will still get a 17% return if you bought Bitcoin at today's valuation. That is way better than the S&P 500. NASDAQ is the only one that comes close, but even then it's still close to 3% higher than what the NASDAQ would give you. And the NASDAQ 100 is primarily tech stocks. So currently they're probably doing much worse. And here's a quick chart just to show you how a few percentages different when it comes to your return can have a humongous difference over a long period of time on how much money it can actually return. So if you invested $1,000 at 10% return, 15, and so on and so forth until 40%, you can just see how each time the growth of that money accelerates exponentially, right? So like 40% is humongously much bigger than the 35% return, even though the difference is only 5%. When you look at the other ones, it may not look big, and that's because the chart kind of like expands a little too much, but the difference in returns from 10 to 15% is humongous. So back over here. So even if Bitcoin only has a 17% average return, it would still beat the S&P 500 by a wide margin. So even, personally, worst case scenario, I would think Bitcoin just reaches the all-time high. Its previous all-time high was 69,000 by 2030. It will still be a phenomenal investment. Now, once again, I just want to remind you, I'm going to put all the links for the different models in the description. Make sure you hit the like and subscribe button. And if you have any comments, questions, if you think I missed a model that was pretty interesting out there, let me know. And see you guys next one.